Hi guys, another busy central bank data is looming. Central bank information from the Australians. Central bank information interest rate decision coming from Australia and Switzerland. So both of them might move markets as usual, and we shall examine what goes. Plus we got the PCE, Deflator, important information from the United States, and something similar in terms of the GDP data from Canada, which is supposedly also moving markets. Let's examine what goes this next week and how we potentially find trading opportunities around it. And let's start with what we get from Australia with the interest rate decision. No change is going to be expected, 4.35%. The rate has been already lowered in the recent past, and we can see that potentially further market motivation might basically happen here. It depends on, in this case. In the end, obviously, kind of as we have to say, now the Australian dollar is remaining in positive market environment. The market moved higher, weekly charts, so priced the market momentum towards upside potential. As we see here, the market motivation remaining quite positive. We had this technical pin bar candlestick pattern, which this week basically did not really help the market much. Instead, we saw another push to higher price levels, and that's exactly the zones we have to talk about here right now, as a major resistance area was broken, and the market might now be free to basically actually act to and continue towards upside momentum. As long as the risk sentiment remains positive, the market motivation at least might push this momentum towards higher levels in the near future. Speaking of higher levels, the S&P 500 had pushed to the upside. That's the same for all indices we here have in comparison. The Dow Jones up towards higher price areas, and also the NASDAQ, the tech index, moving towards positive territory as well in the end. And this is all basically what we could see acting as a further positive sentiment here, and this positive sentiment is maybe as well what helps the Australian dollar. It depends as well as the central bank is stepping forward, and as I just said, made a middle of a mistake. There was no rate adjustment happening, 4.35%, and that's expected, as said, to remain the same as of now. Switzerland is following up with another rate decision. We had already a few rate decisions, and in this case I'm pretty much sure, because we had first rate adjustments coming earlier even this year, and there were further rate adjustments here in June. There was the last one. We shall see whether we will get another interesting move happening here this month. It looks like this, and we have to actually now also even open the charting pattern here, and not well prepared here, because the dollar Swissy in the end, well, has moved quite a fair bit. It moved actually as well based on these indication here from this nicely supportive candlestick pattern, right? Support here, basically double bottom, with even the indicator, the relative strength index, rising after kind of having tested this support zone. If this remains the same, we might see that also the dollar Swissy could rise accordingly. This could give the Swiss franc some negative feedback. The dollar could gear up momentum. The Swissy in this case might weaken, and a retest of the next resistance areas and next lines here, depending on how the market goes, especially in terms of the 50 moving average, which might be the next resistance zone. Say the 88 area here, 88.30, that's the zone we see where's a potential market motivation, which potentially acts with further negative territory. And as we can use these arrows here, that arrow area here up there might indicate downside momentum, and any break obviously of the strong support area might as well act as quite some negative price sentiment. So that's the most important, the bottom line so far for the week. For the Fed, and we had the interest rate decision as well, and they lowered rates by 50 basis points. Some claim that basically this was a preview to give potentially any of the upcoming presidents. Will it be Kamala Harris? She is picking up momentum in the US as well in terms of potential or doing the upcoming election. So numbers might be made to look good when the new president takes over. There was a question from the audience as well. Will there be such a strong cut as either the economy is so bad or to support policies where Jerome Powell is always as politically he can be, stated on the side that nothing much of the below mentioned aforementioned points were the reason. Instead, it's just the market data which causes the underlying moves. However, he stated as well, Jerome Powell, that the economy remains quite stable, and the question is, why then do such a strong cut in this rate decision if the economy remains quite positive? And the political, it's up to you how you score and value this. In any case, 0.2% is the expected underlying price index. There might not be big of a change here. There might not be a lot in adjustment here happening in this case. We shall see how the market goes in this case, but a further market volatility might be expected, and this volatility might actually first of all act towards stock markets, but as well obviously towards silver and gold. Something interesting, as traders believe here, there should be a strong resistance zone, and that's in regards to the silver market right now. Silver might retrace to lower levels first of all before running higher, and we can see that this resistance zone, and let's include this area here, but the technical area, the technical pattern acting as a strong area of resistance all the way towards the next level. If broken, obviously would free some upside momentum. If basically the market weakens slightly, we could see that the market, at least for a while, cuts itself, moves slightly lower first of all before upside motivation might be seen. So that's at least here in regards to what we can see. And it depends. If we see a stronger dollar, obviously silver will basically weaken. If we see the US dollar to weaken, then obviously market momentum might push itself to way higher levels. And that's the same we see here in gold as well. Gold has been a huge rocket recently, and kind of something cool. Resistance area basically this week broken the market up towards a further market motivation. Whether there will be any retracement might be the question. It looks like, at least at some point, that the market should, especially after the daily chart, after so much positivity here, there should be at least at some point some corrective pattern. But when is the question we have to ask other people, as at the moment in the upside it remains a key. Speaking of upside, oil has started to kind of break the upside trend and weaken in the fair recent couple of weeks here, as we see in the chart here. The weekly chart causing this upside potential here, that the market weakened all the way towards the downside, and this pin bar, or say doji candlestick, lasting seemingly is kind of now in a nice territory. Now the next line in the sand might be here, the strong basic previous support area we've seen, and this support area, when being retested, might act as a strong resistance. So expect some potential volatility around that level, and any weakness might happen here, potentially actually acting as this zone comes into light, the 73 area. Psychological round number could cause basically this oil market to weaken somehow, but at the moment the upside momentum, or say the retracement at least based on a charting pattern, seems to be the key takeaway. Secret and silently as well, the Japanese yen lost some steam here, right? Holy moly, this was a big move here basically this week, and the market is now back into positive territory, because after this pin bar we've seen another pin bar candlestick, and now the market might weaken earlier next week potentially, but might actually call for further upside motivation. So there is chances that also the Japanese yen could weaken, and that's being seen against most of the other currencies. We have the euro gearing up steam, we have the pound gearing up momentum, and our friend the dollar against the Japanese yen as well, obviously gearing up some momentum. And all of those happened at kind of tricky and important zones, and we mentioned it in our call basically last week. The support zone, the double bottom we talked about, could act and cause the Japanese yen to weaken against the greenback, and that's exactly what's happening. So in this case, it might make sense sometimes to also check out our videos from the past, what we've said if we mentioned something previously. But this case here, the seeming upside motivation looking quite cool to potentially continue. News from Canada we mentioned, and that's last but not least the GDP figure, another backward looking indicator. could potentially move the dollar against the Canadian dollar currency pair. We shall look at those now, because the dollar CAD bounced off this 50 moving average straight to the downside, and that's something interesting. Dollar weakness we saw based on the rate cut from the Federal Reserve, obviously here, and this weak end right now kind of might be something traders digest for further downside motivation. At least it looks like that this zone might hold the resistance zone, we say right now, and downside motivation looks feasible. Basically on the weekly chart we can see the same area of engagement as well as the daily chart, so downside motivation here is what's the key element. And then back then we also already had it open on the euro against the Canadian dollar. Nothing much being seen. It's more like basically the US dollar against the Canadian dollar. So central bank week kind of picking up and gearing up steam again. Australian central bank interest rate decision is the important one we have this upcoming week. CNF, the Swiss National Bank, CNB, sorry, is also important with the two big central bank news. Obviously the crypto side being quite positive, following up with what we've had from stock market. Stay tuned guys, see you later, take care, have a good week trading, see you then, cheers from Singapore, bye bye.